This is copper, and it's a weekly copper chart. You can see that price has been pretty much held within an 80-cent range since the middle of last year. I don't use a lot of indicators, but I do like sideways support levels. What I can see is that the recent, or the late last year, the last dip failed to touch the prior dip, which is at $3.90. So that looked bullish from there. I can also see that prices nudged above the $4.70 a pound, I think, level. It's closed below that level, but is still holding really quite close. To me, this looks like it wants to break higher. It wants to trade higher. The retracements are getting a lot more shallow than the previous ones, and just the upward movements are a little bit more impulsive. I would be looking for this one to be kind of buying on a dip buying mentality, targeting first that high from last week, and then after that the prior high before then, which comes in just south of $5.20. And I mean, that's a pretty big move, and with leverage on these sorts of commodities, that would be a nice little reward for the account. Obviously, if it goes below $3.90, we're all wrong. $3.90 looks like it's going to be very, very supportive, at least for the near term. You can see it was also a prior high before that last impulsive spike higher. That sort of level is going to be really quite important. But again, I'd be comfortable to be buying dips. If it did fail from here and fall back down towards that bottom of the range, I'd be looking to scoop up some in the low $4 with stops below about $3.90.